Let's talk about opportunity. Where is opportunity right now? Spain? Spain? Jack Hough from Smart Money. You're crazy.
Well, thanks.
You are at least as a writer, you're a risk taker.
I have been writing about some pretty deeply unloved assets lately. I wrote about Yahoo a little while ago. Now
very interesting column you have now talking about Spain, investing in Spain.
Well, yeah, I was talking with a money manager who stopped by, and he was saying, you know, he's one of these macro allocation guys, meaning that he doesn't pick individual stocks and bonds. He just places money in different asset classes. And he says, we've been putting money into Spain. And I said, Spain, you know, the market in Spain has lost nearly a third of its value this year, much more than Europe broadly, and the U.S. is actually up, so Spain has dramatically underperformed other stocks. And he says, you know, this is not a situation like Greece. Spain is a much larger economy, it's much more important to Europe, and he basically laid out a case that, look, the well-being of Spain staying in the euro is more important to Germany, you know, than anything. Germany is the strongest economy in Europe, and you know it has to do with the banking system in Europe. You've got these balances, and some nations are big creditors, and some nations are big debtors according to where the money flows across borders. And Germany happens to be a big creditor, but you know, in times of financial distress, having that much money owed to you by another country can be a position of weakness, and that lays the groundwork for Germany basically taking you know, being
It's kind of like the, you know, if you owe the bank $100, you have a problem. If you owe the bank $10 million, they have a problem. That kind of idea, right?
That's exactly right.
And I'll throw another one at you. Obviously, this is sort of a buy low, sell high basic thing, right? Spain's low, great. A lot of risks, though. This is not for your average investor. I mean, Spain is a lot of risk right now.
A lot of risk.
Right?
You know, one thing you have to do, you can say, I don't like Spain right now, fine. But then when prices drop 10%, you have to reevaluate that statement because it's not a stagnant condition. It changes with price. And then it falls another 10%, you reevaluate. We're at a point now where shares, broadly speaking, across Spain are barely half the price of shares in the U.S. relative to earnings. And the dividend yields, if you take a look at the MSCI Spain index, right, the one that you would, if you bought the iShares ETF for Spain, that's what you would buy into. So the two largest companies in there, Banco Santander and Telefonica, you've got dividend yields of 11, 12%. What do you have to buy in the U.S. to get an 11% yield? When's the last time you saw one? The junk bond market here only yields 7%. And these companies aren't junk. They get half their profits from Latin America. They're financially strong,
so here's
and so
your
on.
tips here. If you're a risk taker, if you're into it, buy the iShares MSCI Spain Index. Hedge against the euro with market vectors, double short euro.
Well, that's all. That's if you worry that the euro could fall further, but you still want the Spain exposure.
And unfortunately, we have to leave it there. If you want more on this, if you're a real risk taker, you can check out Jack's column at Smart Money.